Welcome back to Alpha Recap, the market wrap from stockalpha.ai. The trading day had a real mix of winners and losers, and we're here to unpack what moved the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed on a pretty mixed note today. Some clear leadership in communications and renewables, but a lot of headline risk from geopolitics and security incidents. Lots to dig into.
Totally. So, what really stands out here is how thematic trends like AI and renewables were pushing certain sectors higher, while policy and cyber events pushed others down. It felt like a market rotating around real economy catalysts.
Right, and the rotation showed up in the numbers. Communications and media led early gains, roughly up about 1.5% to 2% intraday. And utilities skewed toward renewables did well too, up around 1% or so. Materials and mining also outperformed, up roughly 1 to 1.5%, on tight supplies in certain rare earths and a flurry of exploration and recycling deals. Industrials had a modest lift as well.
And on the flip side, cannabis was really hit, down maybe 2 to 4%. That was all policy headlines. Financials were weaker too, down around 1%, after a big bank pushed back on early rate cuts. Crypto also pressured the market, down a bit, because of those massive security incidents.
Yeah, the crypto stuff was rough. Record hacks in the month, and one reported heist of about $577 million tied to North Korea. That put a lot of institutional comfort under strain.
Hold on, say that again?
Sure. April apparently set a record for hacks, and one incident was reported at roughly $577 million and had links to North Korea. It wasn't small, and it increased regulatory and custody concerns.
Wow, okay. Let's walk through the big stories one by one. First up, streaming and ad tech. Roku topped expectations and reported over 100 million streaming households. That beat rekindled interest in ad-supported platforms and lifted infrastructure names.
And that number, over 100 million households, was the stat that really got people excited. Advertisers care about scale, and analysts noted the upside could flow through to better ad monetization across the ecosystem.
Right. And the other thing is those infrastructure plays. Companies that run towers and connectivity got a boost because more streaming and AI cloud demand means more bandwidth and real estate for data.
Exactly. AI and cloud CapEx continues to ripple out beyond chip makers into communications infrastructure, industrial equipment for data center builds, and even certain real estate subsegments like data center REITs.
Which brings us to AI theme number 2. Big tech rollouts from the likes of Google and Microsoft reinforced that narrative. But tech overall finished basically flat, right? Range-bound because of cybersecurity incidents and the split between AI winners and security losers.
Yeah, technology was mixed, essentially range-bound. Some companies announced big AI investments and product launches that implied multi-quarter CapEx, while active exploits and major breaches tempered the upside.
Now, energy. Big headline-driving move today. Crude spiked above $120 per barrel intraday on geopolitical supply concerns. That was a major cross-cutting risk.
That jump supported upstream names, but it also raised input cost pressure for industrials, airlines, and some consumer goods. Higher oil tends to keep inflation stickier, which feeds back into rate path expectations and bank sensitivity.
So, what really stands out here is how one price move can help one sector and hurt another at the same time.
Yeah, that tracks.
Moving on. Renewables and project finance had tangible news. Sunrun priced a securitization of about $584 million, and First Solar landed a 118 megawatt module deal. Those are the kinds of financing and backlog items that actually move project pipelines.
And the market noticed. Securitizations lower financing costs for installers, which can improve cash flow profiles, while module sales are visible revenue for manufacturers. Analysts said these items make project build-outs more credible, and that helped utilities and renewables-related names.
Enphase and similar companies were highlighted for software integrations, which analysts are flagging as a margin and recurring revenue driver in the install ecosystem. Software on top of hardware, recurring fees, changes the economics.
Right. When installs come with software layers, you get higher margin, more predictable revenue over time. That's a structural story inside distributed energy.
Short reactions.
Big move.
Not what anyone expected.
Honestly, I was a bit surprised by this one.
Let's talk policy and regulation, because that drove clear losers. Cannabis names were down sharply after congressional movement to block rescheduling, and the hemp THC provision stayed in the Farm Bill. That keeps federal clarity out of the picture and valuations under pressure.
Policy uncertainty was front and center. Analysts noted that without federal rescheduling or clearer rules, banking, taxes, and M&A in the sector remain constrained. Those stocks reacted the way you'd expect to headline risk.
Financials had a down day too. A major investment bank publicly pushed back on early rate cuts, which reset some market expectations and pressure-tested bank trading and mortgage businesses.
That created a drag of about 0.75% to 1.5% across the financials complex. And it underlined how sensitive banks are to the Fed's timing. Later cuts mean compressed, near-term net interest margin optimism.
And crypto. Besides the heist we mentioned, Bitcoin was hovering near a key support level around $75,000. But sentiment was fragile given the security headlines and new rules on prediction markets in Washington.
Security incidents amplify regulatory scrutiny, and market participants said custody and anti-money laundering processes are under fresh focus. That tends to slow institutional product launches and fund flows.
Let's pause. A quick explainer on securitization, because folks ask about that. Securitization basically bundles homeowner or project cash flows into a tradable instrument, so developers can get capital back sooner and recycle it into more projects. Sunrun's deal is a textbook example.
And for listeners who aren't deep into energy projects, a module sale is just a manufacturer locking in a buyer for panels. It's visibility on demand. Together, those moves help unstick projects that otherwise sit waiting for financing or parts.
Good colour. Now, materials and mining. That was interesting. Heavy rare earths and battery metals saw upward pressure because of supply constraints and a pipeline of exploration and recycling deals. That's tied directly to electrification and renewables demand.
Yep. The decarbonization transition links miners producing copper, uranium, and rare earths with downstream developers and utilities. Positive project news in renewables can lift materials and industrial equipment makers pretty quickly.
There were also some notable corporate capex headlines. US Steel announced a $1.9 billion investment into direct reduced iron to lower carbon intensity and secure feedstock. Big moves like that ripple through miners and equipment suppliers.
Investments like that signal long-term demand for greener steel in construction and autos. Analysts see it as hedging future carbon costs and stabilizing supply chains for lower carbon production.
And one more market-moving story. A known active fund disclosed the purchase of more than 500,000 shares of a popular brokerage. Institutional accumulation like that tends to draw attention and sometimes moves related fintech names.
It can influence flows and sentiment, yes, but it also raises regulatory and margin questions for brokerage platforms, which are under closer scrutiny these days.
Time for the cross-sector themes in plain language. First, AI and cloud capex were the connective tissue. Investments by big cloud providers tend to create multi-quarter demand that lifts chips, infrastructure, industrials, and data center real estate.
Second, energy volatility is a cross-cutting macro risk. A price spike above $120 per barrel supports some producers, but raises costs elsewhere and can keep inflation stickier.
Third, renewables and critical minerals are forming a new supply chain complex. Mining, recycling, and project finance all now interact more clearly than before.
Fourth, policy, regulation, and security are primary idiosyncratic risks. When a policy or hack hits, it can reprice an entire subsector quickly and independently of the rest of the market.
And finally, Rate path uncertainty keeps financials and housing-tied sectors sensitive. When banks publicly push back on cuts, mortgage activity and bank profitability are affected.
Those are the threads tying today's winners and losers together. They help explain why some sectors moved in sync while others diverged.
Okay, actionable insights. Not advice, just things analysts said to watch. 1. Watch AI CapEx flow-throughs, cloud CapEx guidance, data center leasing, chip inventories, and infrastructure contracts.
2. Position for higher commodity volatility and policy risk in energy. Track crude moves, inventories, OPEC comments, and geopolitical developments.
3. In renewables and storage, monitor securitization volumes, offtake, and module sales, and grid interconnection backlogs. Those are execution signals for build-outs.
4. Treat crypto exposures with heightened security and regulatory sensitivity. Track hack volumes, custody audits, and any new regulatory proposals.
5. Be cautious on policy-sensitive niches like cannabis. Follow congressional floor votes, farm bill provisions, and state ballot initiatives.
6. Reassess duration and bank exposures given Fed messaging. Watch Fed speakers, Treasury yields, and bank commentary. That matters for margin and mortgage origination outlooks.
Short reactions.
Good checklist.
Useful to share.
All right, some specific items to monitor in the next month or two. Big cloud earnings for explicit AI CapEx commentary, oil ministers and supply updates, any congressional movement on cannabis or crypto rules, and cyber incident reports.
And key price levels to watch. Bitcoin's technical support around $75,000 and crude sensitivity near $120 per barrel. Those were the numbers traders flagged today.
Before we wrap, quick reminder on tone. This was a day that reinforced a longer-term pattern for the year. Secular growth themes like AI and decarbonization are driving upside pockets. But episodic headline shocks keep volatility alive.
Good summary. Takeaways then. Clear bullets. 1. Some sectors outperformed on real economy catalysts and AI CapEx flow-throughs. 2. Policy and security headlines produce concentrated losers, especially crypto and cannabis. 3. Energy volatility amplified cross-sector trade-offs.
And 4. Watch the usual catalysts over the next 30 to 60 days. Fed communications, cloud earnings, energy supply developments, and any congressional moves. Those can re-rate clusters quickly.
Final thoughts?
Just that the market felt selective today. Pockets of real opportunity where secular growth met execution, but also clear areas where policy or security risk kept things volatile.
Perfect. If you like this breakdown, or if anything we covered raised a question, head to stockalpha.ai and ask us directly. We'll answer live via the Q&A feature. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more themes and what they mean for the tape. See you next time.